CA Rudramurthy is also here with us to talk more about markets. Rudra, good afternoon. How are things in Bangalore? Tell us, how are you positioning in trade right now?
Good afternoon, Ajay. Thanks for having me in the show. When it comes to overall market, first of all, I feel even after this 2000 point kind of a rally from the lows what we saw on June 4th, market is consolidating, and just time-wise correction and time-wise consolidation is what you are currently seeing. We are not seeing any retracement whatsoever. Every dip is getting bought into. So for me, I want to make this very strong statement. Valuation can never ever be a trigger. It can only be a catalyst. So if someone is very much concerned on valuation, I can just tell you it can act as a catalyst where if markets are at a good juncture and valuation is more comfortable, a positive trigger will make the market move faster, like how we saw it happening last time. But however, valuation cannot be the trigger for market to correct. So for me, those who are having valuation as a concern, you have to pick the right stocks, you have to be in the right sector. But for me, this up move will continue, and at least till budget, unless we get anything in terms of hiking taxes or some changes to be brought into the way you treat F&O income as speculative or non-speculative, or any of these tinkerings can make some, they can bring markets down, or I need some trigger either globally or locally for these markets to correct, or else remain in the right sector, remain in the right stocks. This market will further continue. Now, for me, if I have to specifically mention, I really like IT as a sector. Pharma can do very, very good. Select chemical stocks can do very good from current level. No doubt on dips, private banks can be very, very good from even here on. And for me, metals can do very good. So you have to be in the right sector. And yes, there are a lot of good stocks in these sectors which I can give as input. And I am very clear, this market is a buy on every dip, no shorting whatsoever. But however, I will also tell you, managing leverage, managing your quantity, and being in the right stock and sectors is very, very important, because the trigger should not wash you out of the market. Being in the game is very important to win the game. So look at the day like June 4th. I could see top stocks down 25% in F&O. Even just 3 to 5 times leverage will make you zero in terms of capital. And imagine people who are all doing option buying. I'm talking just futures buying with 3 to 5x kind of a leverage. So one has to be right now very, very stock specific, sector specific, manage quantities, your leverage very, very well. Risk management is the key. And this market, till you get the trigger, is a buy on every dip.
Till you get a trigger is a buy on every dip. And Rudra, you did mention a couple of names. One is in IT as well as some of the chemical names. So could you specify, because both these sectors were something that has not done well, was quite tepid in the last year. What specifically in IT are you looking at? Is it more mid-cap IT? And in the fertilizers, which and chemical space, which stocks are you looking at?
Good. See, for me, when it comes to IT, I am very, very clear. My top 3 picks will be: number 1, I like Wipro; number 2, Tech Mahindra; and number 3, LTIM. So for me, it is still better to bet on these stocks than going into a mid and small cap kind of an IT stock. And for me, Wipro from here, if someone has a time frame of 2 to 3 years, I won't be surprised if I see doubling from current level. And we are talking large cap, top IT stock where from here doubling in next 2 to 3 years, that is fabulous. And similarly, when I see Tech Mahindra at current levels, really, even if you see their last 1-2 quarter kind of a result, even look at Wipro's last 2 quarter of results, clear signs of bottoming in this counter. And I see from here the risk reward is very, very favorable. No doubt it has not performed in last 1 year, 2 year, but I have not bought it 2 year back. I'm telling to buy it right now. And I'm telling these are areas where you will make money from here on. So yes, for me, when it comes to IT, it is Wipro, Tech Mahindra, and LTIM. Even for me, HCL technology looks good. Even if someone wants to buy Infi TCS, I am with them. So you have to remain in large cap, and these names I have just given. And when it comes to chemicals as such, there are again good stocks in chemical space. For example, look at Navin Fluoro, look at Aarti Industry. So these are stocks where very specific. I am very bullish on chemical. I can tell you one thing, we are very, very close to bottom when it comes to chemical. You might see another 5% kind of a down move from current level. Yes, we have not performed in last 1-2 years in this sector. And in fact, for me, SRF is another very, very good stock at current market price. We are at a very, very strong long-term support. Fundamental also, we are at a place where the downside is very limited and the upside can be with a great risk reward. Moves from current market price is very high. So these are few stocks which I like both in IT as well as chemicals.
Sure, and Rudra, just could you leave us with some of your top picks as well, other than the IT names as well as the chemical names that you mentioned?
Great. Let me make another very strong point. This is not the time to buy PSUs for short term. Unless you have a time frame of, let us say, next 5 years, next 10 years, then you might go into PSUs. I am not comfortable to buy PSUs for a short term trade at current market price because I feel it is too much stretched. And the names which I loved the most, in fact, in my dream, also I never thought it will move up like this in a very short time. Let us say BHEL, BEL, HAL, all these are great stocks, but at current price for very short term, I will avoid PSU. And there are much more, whether it is PFC, whether it is REC, all these stocks I will definitely avoid for short term. Now, keeping these stocks aside, what is that I like for short term? Yes, I can give lot of stock specific names. Idea for me looks very strong at current market price. Biocon from pharma is a very, very good buy at current market price. Again, if I have to pick stock specific from NBFCs, I like AB Capital at current market price. IT and pharma I have already mentioned. When it comes to metals, I like SAIL, I like Hindalco, I like Tata Steel, Jindal Steel. So metals can do very, very good. And two very stock specific calls I'm giving. I like IEX. So for me, IEX is making a rounding bottom formation, and at current levels of around 180, 185, it is a mouth watering buy. I'll keep a tight stop loss of 170, looking at targets of 225, 250 to come on IEX. And for me, Adani group of stocks at current market price looks very, very comfortable. And I'll be very choosy on my stocks from Adani group. And number one pick from Adani group for me will be Adani Enterprises at current market price of around 3,200, 3,250. It's a great buy. Keep a very tight stop loss, just 50 rupees to 100 rupee, which is at around 3,150 from current level. And I am looking at initial targets of 3,700. Once it crosses 3,700, can even go to its higher levels of 4,000 plus. These are trades with 1:5 kind of risk reward. Hardly anything to lose and so much to gain. And also when it comes to IT, metals, chemical, select pharma, all these stocks and sectors what I have mentioned at current market price and at current levels, they offer a great risk reward with very limited downside and a great upside potential from these level. But be very careful when it comes to leverage. Risk management is the key, and being in the game to win the game is very important.
Absolutely, Rudra. Thank you so much for joining in with us, as always, on Markets at Noon and giving us important stocks as well as sectors that you're keeping on your radar.